One, two, testing, one, two, one, two, one, two. One, two, testing, one, two, one, two, one, two. All right, everybody, how are you? If you can hear me, please type yes on the chat. Hello, hello.
Okay, 3 minutes out. Just one final note here from Danska. They say US May CPI surprise to the downside in both headlines and the core. And they say, importantly, May marks the second consecutive month of cooling across housing and non-housing, i.e. super core services inflation, with the latter accounting for the majority of the downside surprise in core inflation. This is a signal of further easing in underlying price pressures and supports the bank's call for 2 Fed cuts in 24. Energy contributions was negative with lower oil prices, while core goods deflation continued in line with expectations. They go on to say underlying inflation momentum has moderated in the US. But that upside labour markets, tight labour markets continue to support upside risk to core inflation, despite signs of gradual easing. We expect central banks, this is the more global view, they expect central banks to take a cautious approach to cutting policy.
All right, we're ready for the rate decision. All right, so it is expected that the Fed will maintain rates at 5.5%. But what we need to see is the press conference maybe, and also we need to see the FOMC statement. So we are almost 1 minute from the decision. And I want to have
Minute to the hour.
here, I want to have the US dollar currency index on the bottom chart, like this. Possible gold longs. I would love. I'm not gonna place any trades just yet. Here, MCNQ, and on the 15-minute chart, ready for some possible longs along the 23, 32, 23, 33 level, depending on what happens. Everybody can hear my squawk, I think.
10 seconds.
10 seconds.
Unchanged as expected then. Says there's been a modest further progress towards 2% inflation objective versus lack of progress cited in the May 1st statement. It says does not expect it will be appropriate to reduce policy target range until gaining greater confidence inflation is moving sustainably towards 2%. Fed median view of Fed funds rate at end of this year, 5.1, up from 4.6% for 2025 end, 4.1 versus 3.9%, 2026, 3.1 versus 3.1 unchanged. Economy
Right.
continues to expand at solid pace.
Some gold
So
bonds
FMC holds
here.
benchmark rate of 5.25% to
Right, at the
5.5%. Inflation made
23.33.
modest further progress in recent
Very
months.
mild
Median
risk.
2024 core PCE inflation estimate to 2.8 versus 2.6. Forecast shows 100 basis points of rate cuts
23,
next year versus 75 basis points of cuts previously.
23, 26 would be my stop loss. Although, let's have a look at the 1 minute chart here.
Just reading a bit more here from the SEP. Says median 2024 unemployment projection unchanged at 4%. Some are looking for it to tick up. 2024 PCE inflation projection up to 2.6 then. Longer run Fed funds rate rises to 2.8 versus 2.6.
All right, I'm gonna grab some longs at liquidation of these lows right here.
Projections imply 25 basis points of rate cuts in 2024 from current level, another 100 basis points in 2025. Show 4 of the 19 officials saw no rate cut in 2024, 7 saw 1, 8 saw 2 cuts. Fed will continue to reduce holdings of Treasury securities and mortgage-backed securities. The votes in favour of policy was unanimous.
Still debating on this. All right, so
US dollar index pairs losses here. Fed gold pairs gains after the Fed rate decision.
all right, very mild reaction, but what a massive spread during the release. Maybe some shorts here. Let's wait. And I'm going to go to the
Commentary from Nick Timoraris there of Wall Street Journal. Minimal FOMC statement changes as recent inflation progress is described as modest.
Well, on the Nasdaq here, we saw liquidation of the highs on the release, mitigating this point of interest. And but you know what? I mean, this would have been a little bit too tight for my taste. So let's wait and see what happens. I'm gonna stick around for the press conference too. So let's wait and see. I'm gonna play it on YouTube. So FOMC. Federal Reserve channel.
Collaboration. Transaction account, and issuing and redeeming U.S. government securities. They also act as a bank for banks by providing key financial services to banks, thrifts, and credit unions. The reserve banks also provide a wealth of information on conditions and a stable financial system. The board and the reserve banks together help ensure.
All right, so let's wait for the. I know, started streaming 32 minutes ago. Hold on. So we have to wait 25 minutes for the FOMC press conference. We shall do that whilst we look at price action on these two markets. Let's see. I'm gonna play some shorts here. Very, very mild risk. Right here at this imbalance. 23.53 would be my feel. And stops above the highs at 23.50, 57.5. So about 6 contracts for $270 risk here. I'll place that. And I'm going to place them here too. So here I have how much? 6 contracts for 270. I'm going to place 10 on the 300 accounts, 300K accounts. 10, I'm sorry. 23.57.5.
According to some gauges there, traders apparently are still looking towards 2 rate cuts this year, even though the Fed has now moved it down to 1 on the dot plot.
Let's see if we can get filled here. Short the short gold. Let's have a look at the USD. Same thing. The S&P and the Nasdaq. Here it is.
Seeing the Mexican peso weaken to 0.62 versus the dollar after the Fed decision. We're also going to hear from Mexican President-elect Sheinbaum as she holds a press conference.
All right, so here's the deal. I'm not going to hold, hey, Jorge, see, how are you? I'm not going to hold, if I don't get filled in the next 10 minutes or so, I'll probably delete this sell limits because I'm not going to hold unfilled orders whilst Powell is speaking and raging the markets. That's a big no-no. Yeah, silver mitigated that breaker right here. But right now my focus is on gold. So exactly, what, 85 ticks from getting filled. Let's have a look at the NASDAQ. Have a look at the S&P 500 on the 1 minute, just to show you possible setups here. Nice point of interest, but again, this is by no means a setup on my entry model. So I'm just going to watch it whilst I wait for this goal to possibly get filled.
Sure that consumer and community
All right, there you go. So today's gold short was spot on. The level that we took profits on. Let me show you whilst we wait. We shorted here and we took profits right there. So I was talking about a possible possible short here on this imbalance that I didn't take, right? Because one, it wasn't an optimal setup, and two, I mean, we have a very, very, very volatile day ahead, and we already, we already had a nice winner prior to all of this mess. So why trade again to possibly give back the gains? Birdsnader sounds nice background. You can hear those. You know that we have we have a ton of birds that come visit us. And the last time I was here in front of my screens, and a toucan, how do you say that in English? You know, a toucan flew inside through a window inside of my house. I mean, they always come here. I think they live around. But there's a downside to living in the woodsy area. We do have visitors that we do not like spiders and scorpions. Jesus, yeah, and snakes. For example, ¿cuándo fue, amor? Yeah. So not yesterday, but the day before, we were about to go out, and then my girl spotted a big snake downstairs. So yeah, we had to take care of that. Nasdaq moving. Let's have a look. I mean, I don't see any. I mean, this is very choppy. I mean, just have a look at what happened here. The Nasdaq liquidated the highs and came towards this point of interest right here, just to go down. But again, I wasn't going to front run the news. I mean, because the market really doesn't care about your lines on the chart or your levels. So definitely was not going to front run anything. But yeah, nice one here on the Nasdaq. The S&P 500 remains to mitigate that particular point of interest. So let's see what happens if we can get a setup before Powell speaks. I don't think we're going to have it, but let's wait and see what happens. Yep. So we're 50 minutes away from the press conference, and yeah, let's just wait for that. Let's have a look at some other markets that might have moved. Bitcoin, why not? I don't actively trade Bitcoin futures, but why don't we have a look at that? Crude oil. You know, I was talking about these shorts that I've been hunting in this particular market. There you go. Now, let's have a look at what happened on the higher time frames, of course. Let's go to the hourly, and yeah. I mean, I see absolutely nothing tradable. Or I don't see anything that I would have traded, maybe. Oh, well, we had some very nice liquidity here that possibly, no, it hasn't been taken out just yet. So this by no means is a market that I would short. At all. Whoa, moving, gold moving. Let's go back to the market that we're actually looking forward. Let's see about that risk on the S&P 500. What I'm doing here, I'm not going to place anything. I'm just calculating the possible risk that I would take because if I decide to take this one, it's going to be at market, right? So I need to be careful on how many contracts I place that short. 54.48. Of course, there will be micro contracts. And on this account, I reckon I can only trade 15.
Mexican peso continues to lose out here now. It weakens by about % versus the dollar following the FOMC rate decision.
Maybe one E-mini contract. Let's have a look. Uh, 54.48.5. Yeah, one full contract will be nice. All right, let's see. Gold moving, S&P moving. Let's see. How can I change the color on this? I don't know if I can. That's fine. All right. This is a waiting game, and we are 11 minutes from Powell speaking, so no. I mean, if I don't get filled in the next, 3 to 4 minutes, I will delete this order. Because
10 minutes to the bottom of the hour until we get the start of the Fed.
he's going to be a big mover, so heads up to that. Now, let's see. let's see, on the other side of things, on the S&P 500. Right, so let's delete all the drawings. Um, if possibly we get a hint on future rate hikes, we might be able to catch some big longs on a volatile move to the downside. But I would love liquidation of all of this, you know, mess here towards around 53.76. Let's have a look at the Nasdaq again. Same thing. The thing about this possible short right here on this point of interest is that it's way too tight of a stop loss, and this is going to be quite volatile. So no, I don't think I'm gonna place it unless I see a big rejection at this level, right? So here on, I'm gonna place the micro ES. All right, let's wait. Let's just wait. Something I really don't like about this particular, it's not a setup, right? Or possible short on the S&P is this. If you notice, this is the 1 minute chart. We got a nice and auto liquidation of this lows right here. So, a liquidation and a price failure, right? Mitigating at this point of interest. Right here. So, I'm not in love of this possible short here since we got this rejection. But let's wait and see. I mean, like I told you, the market doesn't care about what I draw on my charts, and more so during FOMC. I'm going to play this on my other tab, on my other screen. Actually, no, I'm not gonna play it. I'm gonna play my squawk since you know, the squawk is going to just you know, shoot the most important remarks. Boom. I want to see the realized P&L. Net price, I don't care. Well, maybe. But and sold. I don't care. Save. There. No, that's nicer. So that's my P&L on all 300K accounts for today. So 5 minutes until Powell starts the press conference. So what I can do, what actually can do is this. Placing my stop losses above this high and lowering my risk, to just about $200 on this 156K account. And the same thing for the 300K accounts. Actually, I'm going to do that. Very risky. And lowering to just $200 worth of risk. I'm okay with that. Same thing here. And my orders. How do I modify the orders here? I don't know. I'm gonna read. Cancel all. Yeah, and again, I want to do this again. Just 5 micros each account, so that's a 40 micros in total. Sell limit, and here, buy stop. There you go. That's nicer. Now, if we get a fill and a nice rejection, I'm going to look to add to this position. Again, mildly. So, lowering here to add at market for another 3 micros. And this is fine. I'm going to turn on my squawk actually. All right, almost there. All right, Powell. Pero voy a cambiar que se me calentó. Gracias.
Powell's press conference now underway. We'll bring you the main conference points, main talking points.
Let's just watch the walk. Oh, there you go. There he is.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past
Just
few
repeat
years.
from the statement then. Our
labor
economy has
market has
made
come in-
considerable progress, continued strong job gains in the economy. Inflation is too high and has eased substantially, but still too high.
All right. There we go, the S&P 500, mitigating that zone. Again, not taking that short on the S&P 500. Nice mitigation on that zone. I should have taken it. Of course not. Of course not.
Powell says consumer spending remains solid, but private and domestic final purchases is a clearer signal and is still strong.
This is something that I would never trade. This imbalance right here in gold, never. So look at the NASDAQ. What I also don't like about that, about
Powell sees the labour market relatively tight, but not overly so.
about this particular point of interest right here is this. We have some liquidity spotted here. So now similar highs, not exactly equal highs, but still. So very, very, very possibly we'll be looking for a liquidation of those highs and then seeing a reaction. So let's wait. Whilst we wait for this possible gold short, let's say orders 5 micros on each account, yes. No. Really, nothing going on. This is a waiting game. last month during the press conference, the S&P 500 took a very, very big dip, and I bought that dip.
Said Powell, remain highly attentive to inflation risks.
So this is quite nice in gold, about the comments on inflation risk.
Modest further progress towards inflation objectives.
That we're not getting.
There is now greater confidence on
unlike
inflation in order to cut. Have not got greater confidence on inflation in order to cut. We'll need to see more good data to bolster confidence on inflation.
Come on, baby.
Powell, summary of economic projections are not a plan or any kind of decision. He goes on to say, if economy remains solid and inflation persists, they're prepared to maintain rate where it is as long as appropriate. If economy remains solid and inflation persists, we'll keep rates where they are for as long as needed. Policy is well positioned. The opposite is also true in terms of rate cuts.
What else are you guys watching? So look at the euro. Silver similar setup right here. But again, focusing on gold. There's the S&P 500.
Powell says we're practicing a slight element of conservatism on our inflation outlook. Powell repeats we need more confidence on inflation moving back down to 2%.
This inflation comment should be a big mover for gold, but still very choppy. I reckon market is waiting on comments from future um, rate hikes. Oh ho ho. Very choppy around, but I'm still gonna wait. There you go. Buyers piling up. This dumb depth of market is gold, the micro futures contract in gold.
I'd look at all Fed forecasts for rate path as plausible. No one on the committee has a strong commitment to a rate forecast.
So if I had taken this short right here, very possibly I would have already been stopped out of break even on this move to the upside again to the zone.
Powell says we won't say how many more months of good data is needed before confidence is met.
A possible break of the 2341 level in gold. It's not that it's going to invalidate my trade idea, but it's going to make it very, very hard for me to get filled. So I'll wait and see what happens.
Powell says there was the ability to adjust forecasts based on today's CPI, but said most policymakers do not update their forecasts though.
Now, I'm gonna stay here until everything settles down, because if gold, right, focusing on gold right now, if gold continues to dip towards this zone, the 2332 to 2333 level, I'll probably delete my sell limits and look for a shifting immediate market structure to go long. But again, let's wait. We have no commitment to a particular rate cut. Cut with her. Did I say rate hike earlier? I don't remember. All right. Now my big focus is gold. Is he still?
Into better balance, 0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic. Relatively tight, but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. And we'll just have to see what the
All right, so what I'm going to do now is I'm going to leave these sell limit orders in gold. And I'm going to watch the liquidation of these lows. Same here. No orders. And So what I'm looking for here is a shift in market structure on the liquidation of these lows, right? So basically, a liquidation here, a break of these highs, and then coming towards that level for possible longs. Let's wait and see what happens. Very choppy on U.S. equity side, the S&P 500 and the Nasdaq. Extremely choppy. Nothing to do there.
Angelita, hazme un favor. Dos favores. Traigas un trapeador que voy a ensuciar y quiero meter quiero meter cinco que se van a ahogar.
All right, there we go. Boom, price failure. Waiting for that price failure, of course. All right, S&P 500 showing weakness right now, but focusing really hard on gold at the moment, and only that. You see, it would have been really, really, really hard to hold this short on the S&P 500 throughout all of that mess. All right, we need a volatile move to the upside to leave us with a nice imbalance here. Look at the S&P 500. There we go. There we go, displaced. But let's wait for that candle closure and this next 1 minute candle to show us a nice imbalance play for our entry. There we go. We need a closure on this 1 minute candle to place some buy limits here. Let's see about that risk. Um, 23.55, I reckon. 23.35. Yep. 550. There you go. Setting that entry on gold. And here, hold on. So I'm taking 10 micros here. I'm gonna take 50 micros here.
No one has a rate hike as a base case.
All right, now let's see if we can get filled.
Order filled.
All right, I'm long gold at the moment. Mild risk. Mild risk.
Banking in good shape, says Capel.
Good reaction here. Now this is not a trade that I would that I'm going to manage my manage it on a drawdown. This is a because it's a mild risk. It's a make it or break it, right? Look at the S&P 500.
Powell, then wages still running above a sustainable path.
There we go. There we go. Big, big, big push. Ah, spoofing. Did you see that? 39. There you go. 39 contract short here. 2340, 2342. Just have a look at the DOM, the depth of market here. It's a 39 contract short. Big run on the S&P 500. This either is going to be a very volatile move to the upside or to the downside. I know it sounds dumb what I just said, but just by looking at depth of market, you know, 2342, a ton of orders there. Right here. So look at other ticks. Tick chart. Buyers unable to swipe here. Swipe. To sweep. Is he done?
Incoming data shocks. That's the worst experience, who experience the most pain from inflation. So, you know, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, you know, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, you know, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress And we're in the phase now of just, sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is, anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about, your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not
Powell
something
says
we're
bulge
looking
of
at changing or
market
would
rent
look at
increases
changing.
has to get worked off.
Super stacked, those sellers. We need a fat finger here. Super stacked, sellers are super stacked, but keeping this trade open. So I'll look at some volume here. right there. Point control is right on my entry.
A decision to loosen policy could have several reasons associated with it.
I don't know if I'm gonna cut this short here or not. All right, I'm gonna keep it for a little while. Gracias. I mean, the thing is that I'm just looking at buyers jumping in. And you see, I mean, there's a ton of buying volume. So I'm gonna wait. All right, not looking good for my lungs here, but still in them. I'm gonna move my stop losses here higher. To just below that low. Same thing here. And I'm gonna watch the S&P 500 here on the liquidation of the highs. Not looking good for gold longs. Well, have a look at the S&P 500. We're probably going to get stopped out here on my gold long. Still going to be, positive for the day. And if I, or when I get stopped out here, go long, I'm gonna finish the show. But I'll be looking at those S&P 500. So stopped out,
Stop filled.
still $300. On profit for the day, it is what it is. It didn't pan out. Now, here's that imbalance that I would have played on the 15-minute chart, but this is just too strong. And yeah, that it is. I'm done for the day. Ended up positive for the day, so happy about that. This didn't pan out. Possibly we could get another opportunity long here gold, but I am done. 1-1. Thank you for joining me. I'll see you guys tomorrow.